All right, good afternoon, traders, and welcome back. Welcome back to a live stream. Good to see some of you already are back from the morning session. So we took our hour break, and we do have some people rejoining, and we'll also most likely have some that only joined for the afternoon session. Let's see, Randwolf, good morning. Brad, welcome back. William, Fauci. All right, William, congratulations. Looks like you took a bit out of the market over the lunch hour. Good for you. All right, we'll give everyone just a couple more minutes to get in here, and then we'll get going for the afternoon session. Okay. All right, all right. Let's go ahead and get going here. It looks like we have the majority of our early participants. So we'll get running. I just want to review the lunchtime movement just to see what happened there. Just before we got off, we were in the macro period, and I remember looking and seeing that this high was swept, switching us back bullish during the macro hour or the macro 20-minute period. Given that, when the macro was over, we see that we traded into fair value gap down here. And if we just do a quick measurement to see where we did on the retracement, we came back to 71, even 78. Let me make this larger so we can all see it. All right, so we had a tap into 78 and nearly 83, but not quite. But we did have fair value gap here and the one below. It actually tapped into the one below, which was created at 1150 or sorry, 1142, created at 1142. That fair value gap was the one traded into, and then we saw the buy up after that. So just so everyone can see, as we were building up here from before 10:50, 11 o'clock, 11:30, right? We're building up bullish momentum. Then we crossed over, traded below. So we had a market structure shift here, or a breaker structure, not necessarily a shift, but a breaker structure. We then had it follow behind. So then we had a continuation of that bearish momentum, that bearish movement, only to have during the macro period have a run back up above these highs to turn us back bullish, which then after the macro was over allowed us to take a long, if that's what our risk profile said that we should do. So it really depends on, how you were feeling at the moment. But if you were willing to take a long into this period that I mentioned before was 2 years ago. So this is like the first day of the year of 2022. This area above us, we saw price trade off of that, selling from the all-time highs, which we haven't revisited until right now. So if you were comfortable pushing into 2 years ago price action, then this was the move for you. We saw a breaker structure in the macro return into a discount where there was a fair value gap to give you an entry. So for anyone who decided to take that over lunch, congrats to you. There was, a low hanging fruit would have been here, sweeping these highs at 274. You could have entered down even on the most conservative level at 243. right? So you're still talking 30 points as a minimum. And if that wasn't enough, you could still be in and you could be looking at even more than that. So again, congrats to anyone who took that one. I know I wasn't super bullish or bearish. I wasn't looking to get into any trade during the lunch hour, nor was I looking to get into a trade during the 11 o'clock hour. So let's see how I feel this afternoon based on price action and whether I think there's an entry for me. I'll let you know if I see that, but otherwise I'll continue to call the market as I see it, let you know where certain price points are, where certain setups are generating themselves. And then you guys can go from there and I'll do the same. We did have news this morning. So the news came out at 10 o'clock. Remember, this World Economic Forum has been meeting all week. So they really didn't, we didn't see any big price movements that we would have contributed to that meeting. But we did at 10 o'clock have a red folder, which was a bit of a mixed bag this morning. So we had above on the University of Michigan consumer sentiment, above expectations there. The forecast was at 70 roughly, and we got nearly 79. Existing home sales fell short, though. They thought it would be on an annual level of 3.8 million, and it was just short, about 50,000 short on an annual level. And then we also had the University of Michigan inflation expectation, which there really wasn't a forecast, or they forgot to publish it. So I'm not sure what this piece of news did for us, but it does show that consumers for the next 12 months are a bit more relaxed related to inflation and believe that inflation is going to go down even more than they were 12 months ago. So we'll work off of that, and we're now into the afternoon session. And we'll see what type of price action we get and whether we're looking for longs or shorts this afternoon. But let me go ahead and remove these items since the macro is over. And let me place it on the next set. Just since we're in it now, we just want to see if there's anything that happened during this time period we should be aware of, and we'll go from there. There we go. So far, we've only gotten continuation, so no break of structure or anything. So this macro period probably will end uneventful, but we still want to mark them up and still want to make sure that we pay attention to see if there's something to do. And with that being said, again, welcome everyone to the live stream. And yeah, let's have a good close to our week, a good close to Friday here in this afternoon session. All right, let's see. So you say price retrace to 17,276. All right, Crypto Queen, you're saying you entered on this fair value gap? $17,404. All right, Mathematical Genius, welcome to the chat. Welcome to live stream. Welcome back. Okay, William. Thanks for that insight. Okay, so if inflation impacts interest rates, so if interest rates go down, that's bad for the dollar, which should be good for all equities. Okay, awesome. 276. $17.44 level. What is the best criteria for my trade setup that I would take? For my best trade setup. The best trade setup, I would say the best trade setup is the 2022 mix with the breaker and fair value gap. So that's probably the best setup, I would say. So it's right here. Interesting enough. Okay. All right. So you would take. All right. Let's move this out of the way. So we're trading down, right? We take these two up close candles to be your breaker. Breaker, remember, is going to be your low, your high, your lower low, your higher high on a bullish breaker, right? Inside of that breaker, what you want is a fair value. I mean, it's technically not the same. Let me find a better example. I don't like how this low didn't get swept. I like that low should be swept. Hmm. All right, maybe this one will work. All right, here we go. This will be your bearish breaker. Right, high, low, higher high, lower low. So you'd be taking, so what you want to look at here is I like when I have the breaker with a fair value gap inside. All right, so let's see, where is the fair value gap? Here. Okay, so when you have the fair value gap inside of the breaker, you can have more confidence taking the breaker as an entry, because a fair value gap should protect your stop loss. And so this is what they consider the unicorn. It's also ICT's 2022 model. If you get a energetic move out, which we do get some impulse after reaching whatever this high was at 17,255. So I would say that's probably my best setup is the breaker with the fair value gap inside. Not sure if that was the best example of one, but that's a lot of the trade setups you've been seeing me take recently. It's most of the time it's when we're changing direction. There's a sweep of liquidity. There's impulse in the opposite direction, which creates the breaker. There's a fair value gap left behind, and then you take that. All right, let's get back to where price action is. It is still moving up. So anyone in longs still holding. Appreciate it. Yep. 2017 national champions. Yes, you did say something about a fourth standard deviation. I remember that. 444. All right, Crypto Queen, keep it going. Make sure you always understand where your stop loss is. Keep a look at price action so you know when it fails. And that's when you want to take the bulk of your trade with you. All right, Samuel, welcome back. Okay, well, oh, you missed that into the fair value gap. Yeah, it didn't get into the fair value gap. It took the breaker and moved on. So yeah, I see what you're saying. I think I took a trade similar to that yesterday, and I put my stop loss behind the fair value gap, assuming I took the entry at the fair value gap, but I took the entry at the breaker. Okay, the 3 fail PDA rule. Okay, yeah, perfect. If you have that, then you already know exactly when it's time to get out. All right, let's see if we can't get to 4,500 subscribers by the end of today's session. That's my goal. My goal is to convince 12 new people that they should subscribe to the channel. Let's see if I can do it. Yeah, Samuel, I think you missed, you weren't here this morning and I was, talking about exactly that, or maybe I was talking to someone else. But I do remember this question very recently, um, that all of a sudden my psychology also changed when I was in the funded challenge and I started winning. I started making some gains, and because I view a funded challenge like it's my real money. Um, but then all of a sudden I didn't want to lose anything. I was like, oh, I'm making progress. I'm halfway through. I don't want to drop back down. And so what happens is your psychology changes and your stop losses get tighter. You move them quicker. All those things happen. And before you know it, you're breaking even more often or you're losing more trades than you were before. And so if you're not going to trade a live account or a funded account the same way you would trade a demo, then that's when you need to work on your psychology because your technicals are fine. It's that you're not entering a trade and you're not risking the same amount as you were before. And without a risk, there's no reward in trading. If you see a lot of people talk about they're doing 1 to 10s and 1 to 15 risk reward trading, I'm not saying those aren't possible because they absolutely are possible. But if they're doing those consistently, then they're not telling the truth. So without risk, you're not going to get the reward. So if your psychology is changing because you're in a funded challenge, take a step back, go back and review whatever psychology materials that you were using before that helped you with your trading before you decided to do a funded challenge. Go back, do that review again, get confident again, and then come back into your trading challenge. So yeah, if the psychology isn't working, then go back into your technicals again on back testing. So once you start to see your trades work out again, you say, okay, I think I should get in here. And then you see it produce the results that you wanted and you start gaining that confidence again, then get back in. But as long as you're trading differently, close your funded account until you're ready to resume the way you were before with the same level of risk. Right. And yeah, Samuel, just keep checking in with us. We'll have plenty of people here to encourage you to continue going on and also give you some tips on how you can turn things around. But if you were making good trades before and you were winning your trades in your demo account, then your technicals are fine. It's just the psychology of having real money on the table that's bothering you. And so just take a step back until you conquer that. Last one. Oh yeah, I forgot you're doing your own stream. Yeah, Samuel. I will say streaming helped me out quite a bit because I used to be when I was sitting here alone and there was no one here to critique me. Whenever I would get nervous, I would move my stop, or if my trade was 20 points in profit, but I originally wanted 40, I might close my trade. And doing the live stream, I don't do that anymore because I know that people are watching. That keeps me honest. It keeps me focused, and it ensures I only take 1 or 2 trades per session. Right? I'm not in here hitting the button every single hour. Every time something looks close, I don't take it. I wait until it confirms everything I need. And if I'm too late and I don't get it, then I just wait for the next setup. So I found that live trading helped me. If it's hurting you, then maybe yeah, if it's hurting you, then I would say go back to back testing until you feel more confident with your setup. All right, let's since we're not actively looking for entry models because price is just running and doing its thing right now, let's take a larger view of price action just to see how big this really is. All right, this is the hourly now. I know this area here, I boxed it up. It's not really a fair value gap or anything. I just boxed it up as the wicks on the daily, if I'm not mistaken. Okay, so yep, so I'm still on the continuous contract here. So let me go to the weekly. I think it might be the weekly. Yep. All right, so this is the range I marked up. So it's essentially from this candle body all the way up to the top wick. If you don't have this area on your chart, it's because you don't have this area right here. The adjust for contract changes, which shows that the high is at 17.7 something. If you don't have that selected, then you're going to see that your high is what it was at the time that it was made, which was 16.7 whatever. Right, but every time there's a new quarterly contract, it seems like it shifts up, and so when you click this button, it'll adjust it for you. Yep. But I'll delete this because it's not a fair value gap or anything like that. So I don't want anyone to get confused and think that they're inside of a PD array, because it's not a PD array. It's just me marking up, kind of where those wicks were, where price just kind of sold off and fell. So I was looking to see if we were going to have any type of trouble moving through this area. It looks like we're already here at 351. You know what? It might be worth marking up this 50% of the wick here. Oh, okay. Okay. Drop this. All right. So good news is this wick runs to the 50% mark. So when I took 50% of the week, that has now split this out into quadrants. So we have quadrant 1, quadrant 2, and then this is 3 and 4 combined. But I'll delete this area for now. I'll run back over, and then we'll know that this line here at 17,389 is half of that wick on the weekly time frame. All right, and as price continues to push up, I will continue to also update where I think the TGIF will land if we do get a TGIF today. Okay, there we are for now. 20% retracement would take us down to 17,224.5. Oh, the continuous. Oh, sorry about that, Sniper or Elena. Elena, there's this button right here called Be Adjust down here in the bottom right corner. Be Adjust. Just hit that. And it's right next to the same as when we go in the morning, we change to regular trading hours from electronic to see that gap. It's right next to it. All right, Sniper. Well, hopefully it's helping and you're getting some benefit from being here. And you're not the only one. There's a lot of traders in here who are seasoned traders taking their own trades and believing in their own setups. And so they're here just for the community and possibly also the psychology. Yes, but to cover the fees for the trade are really small. So all you need is one tick. So entering a trade is a little over $2 and the same to exit. So if you add one tick for $5, um, then that'll cover your fees, your entry and exit fee. Yes, Michael. If we see a TGIF, price would be going down to here at 224 is according to the current high. 224 would be the TGIF 20% retracement. Okay, we're now at 1:30, so that open in 30 minutes is now completed. Oh, anytime, Michael. You're right, Brad. Yeah, and that's the thing. It's like it's going up, but there are not a lot of targets above. So I'm not sure exactly where price is going. And I don't want to get FOMO and just jump into a long when I don't have a good indication of where it's headed. I mean, there are some places for it to go, some liquidity points above. It's just there's just not a lot. 17,375. Okay. Not too far from where we are now. Another 15 handles or so. Awesome, Crypto Queen. That is amazing. Told you I like 2R from fair value gap entries. Wait, let me check in on the others. I haven't really looked at the dollar this hour. Just want to check in, see where it's at. Okay. The dollar has put in new lows, but it's still kind of in like a consolidation type price action. Unbelievable. And if we look at where price came from on the midnight open this morning, yeah, it made the first hour or so really difficult for us. But since then, it's just been straight bullish all the way. All right. So who else is still in longs? Who's still in? 17,375. Okay. All right. Thank you, Luke. All right. Let's just look at all these fair value gaps. Let's see which ones are traded into. So we have this one at 299. Right. So that 1 to 2 was about 30 points. Yep. Then we had this one for 40 points for anyone who entered at 314 or so, right at 1300. So right as we started. And so far, none of the others have been traded into, at least not on the 5-minute. Tired. Yep. Yeah, Crypto Queen. Actually, the quarterly contract and the continuous, they should be the same. There shouldn't be any difference. The only difference you'll find is the difference would be when you go to when the quarterly contracts shift over. So the continuous will shift on a predetermined date, determined by TradingView, or not TradingView, but probably by the market, the broker CME group. But the actual quarterly one, I switch over when the volume is when volume is the highest. So on the next contract, until it takes over the current contract volume, I don't switch over, even though the continuous contract may switch over. Back in December, when we went to the March contract, I think the difference was only 1 day. The continuous contract switched over the day before I did. But otherwise, yeah, you shouldn't find many differences on a continuous contract. If you do, let me know. Let me just see. Let me just see what's on the weekly, because that might be. Um, yep. Okay. Yep. So the quarterly contract doesn't even have data going all the way back, or at least it doesn't look like it does. December of 22 is as far back as you can go. So about a year is as far back as a quarterly contract will go for you. Okay. Didn't know that, but now I do. Yep. Yeah. Yeah. You got to go to NQ1 to get anything more than like 6 months back. Yeah, you're right, Crypto Queen. There is no historical data on the quarterly one. Nope, nothing in trading is random. Everything is based on some mathematical formula and an algorithm, and all you have to do is find a pattern. That's all. Just look at the 1 minute. I just want to see how many entry models or how many entry points were given. All right, we have the same one here, 111, the same one at around 127. Okay, so we got an additional here. Yep, no lows violated either. That's, gotta love that. Not until it reaches a key level and then it'll start sweeping lows. But until that happens, all lows have been protected. Even these. Right? Trailing stop loss is going well so far for anyone in the long. That trailing stop loss is protecting you. Oops. All right, let me readjust where I think we're going to end the TGIF, assuming we get a TGIF. Oh, I forgot I drew it on a continuous contract. Okay. 245. It's here. All right, let's get back to the chat and see what I'm missing. Hey, you're right, Ray. What a day, what a week. NDX 100. Jeez, holy smokes. 5K on Topstep plus 30K on the other accounts. Wow. Oh, okay. NTB, not sure what that is. But yeah, loot. We also have historical data. So you don't have to trade the quarterly contract. You can trade the continuous if you want. So historical data is available. Hey, Ray, you should be done for the week. The market hates you right now. Okay, all right. TGIF is a retracement model for the end of the week. When you're pushing in one direction, you're near the extreme. So you're either at the high of the week or the low of the week. On Friday afternoon, a lot of times you'll see a retracement of 20%. And so this is for caveman. So that's what the TGIF is. It's another ICT model that he showed us that if you see an extreme on Friday afternoon, that you can reasonably anticipate a retracement of some kind. And 20% is a reasonable level. Yeah, William. See, that's normally what I do, but it's because I have specific rules that tell me to close it at that level, and because of it, that's what has to happen. And so, following your rules is key. Now, if you want to change your rule now to have one runner or to leave your trades open to be a runner, then that's fine too. Just change your rules. Well, splash. At least you got a workout in, so at least your body's feeling good. Yep, Ray, I'm the same way. The unicorn model does look good to me, and it's been working. So I prefer that one the most. Yes, it's 20%. So you take the weekly candle, and then you do you put a Fibonacci on both extremes, so from wick to wick, and then you look for that 20% retracement. And it's yeah, and it's just on Friday, but yes, it's for the weekly range. So I'm not saying we will get the retracement, but if we do, we can reasonably expect it to land somewhere around 245. All right, price moved up a little bit, so that 20% is now 248. Yeah, if it does that, that will be sweet. We'll be looking at over 100-point move. Oh, I see. Oh, that's so Ray uses that confluence of a higher time frame PD array with what he's seeing on a smaller time frame as his entry model, which gives him the confidence that that's the right place to enter. Ray, what do you like on OTE? 62, 71, or 78? All right, 61.8 and 70.5. But yes, it's a range. You can take it anywhere in between there, depending on where you want to place your stop. Okay. Thank you, Ray. Appreciate it. If I'm gonna go short, Joshua, it's only when price action tells me to. So I'm watching the candles and I'm waiting for there to be a break of structure or some reason to go short. As I mentioned earlier, I had a weekly target, weekly high of the previous week's high, and the week before that, which was the swing high there. I felt like those were easy targets to go get, and that happened during early trading hours today. And so after that, this is all like gravy on top. It's already done what it needed to do. And so where exactly it's going now is we'll see. But until price tells me to look short, we're not going to look short. Exactly, DB. There you go. Yeah, you're right. 5 minutes is silver bullet time. Crypto Queen, you're right. Hmm. Okay. Let's take a peek. So the Dow is actually playing ball now. It's, yes, it is. You're absolutely right. Yep, got to level up at 38,031 or just slightly higher, 38,038. Adjust this a little bit, 252. Let's see, maybe we can do this on the hour. Just looking for price points that's somewhere close that we can see as a target. 457. All right. So on the 1 hour, it looks like 457 could be the next target. 457 flat. Just trying to give everyone something to shoot for if you're in a long right now. And that's the next hourly candle from back on January the 4th, 2022. That's that candle's high. And then after that, there's a swing high at 493 or 494. So let's mark that as well. Right. Hopefully that provides some targets for anyone in a long right now. All right, Crypto Queen, TP3. Awesome. Wow. Dr. J. So the silver bullet is between 2 and 3 o'clock. We look for a fair value gap and a continuation of market structure and towards a close low hanging fruit objective. In this case, I don't think we actually have one, to be honest with you, since we're at the highs of this year and we're above the high of last year. So the only price point we can point to is early in 2022 at the last time when we were at the all-time highs. So it's really hard to pick that low-hanging fruit objective for a silver bullet, especially for a long. So this one's going to be a little tricky. I mean, I marked off an objective that's 60 points away. I wouldn't necessarily take a silver bullet looking for that. But the silver bullet would be, for instance, if we did see a retracement here, you would take an entry somewhere down here and you would target getting back to this high as a potential silver bullet entry, that kind of thing. It's probably better on another times, like not today, just because we're at the extreme end of the market. But generally, we target either a previous high or low, depending on which direction we're going, whether it's equal highs or fair value gap or some pool of liquidity that's nearby within like 20, 25 points. Good job, DB. Congrats. Glad that you completed your combine. Yeah, when it's out for the races like this and it's just far in front of you, you just sit back and watch it, but you don't try to catch the last little bit or whatever. It's just not worth it. Vivian, yeah, this is this is what we're looking at. Oh man. So since 11 o'clock, check out price action on the 5 minute. Trend on the 15, continuation on the 5, entry on the 1. Okay. All right, Brad. Yeah, that seems like a good logical way of viewing price. All right, go ahead with your question. Swapnel, go ahead. It's through back testing. So when you back test and you take your strategy and you start looking at setups, what type of stop loss are you using? Because if you use the same small stop loss in your back testing and it works, then it should theoretically work in live testing as well, or live trading. Um, so what you want to do is you want to choose a level that you like as far as stop losses. I'll go back over the way I do stop losses on fair value gaps, and keep in mind not everyone does it this way, but you have to be willing to risk something if you're trying to gain something. The market doesn't give away free money, right? So depending on which one of these stop losses, I'm sorry, fair value gaps you wanted to enter on, let's just take this one because we did get a retracement, so there was an entry there. So you set up your long tool and your entry is right here at 315. So now you need to decide how far are you willing for price to go down before you want to collapse your trade, right? So for me, if you look at where this fair value gap is, it's on this candle right here at 1250. So what I like to do is go to the candle to the left and put my stop below that extreme or right at it, right? So that's telling me I need a stop loss of 20 points, which is $400 if I lose this trade. And so in order for me to take that trade, I need to be rewarded if I'm right. And so the reward I like is a 1 to 2. So I go here where it says risk reward and I set it for 2.0. Oops. And that's my trade. That's a trade that I like to take. Now, it doesn't work all the time, but through back testing, I realized that it works more times than not. And it allows me to be profitable even through absorbing some losing trades. And so if you look at how this was set up, you would see that about half of my stop loss was absorbed at some point during this trade. I was in drawdown, almost halfway down, right? So almost 10 points. So I would have been looking at minus $200, but I still would have had to remain calm and stay in the trade. So So that's why backtesting is really important, because you get to then test those different levels, whether it's a 1 to 2 like I like, or some people say, no, I need more than that. I need a 1 to 3, right? So then you test 1 to 3 and you say, how often, if I take a 1 to 3, how often would that work out for me? And based on the results, then you decide whether you go 1 to 2, 1 to 3. It could be that different time frames has a different, I guess, different size profile. And so in that case, maybe at 10 o'clock, you go 1 to 2, but then if you trade in the afternoon, you go 1 to 3, because it usually expands more or whatever. All I'm saying is that you will get all of those confirmations through back testing in practice. There's really no other way to do it. I can tell you what I like to do, but you're going to question it if the trade starts going against you, or you lose 2 or 3 in a row. You're going to question whether I was right. TP4, Crypto Queen. Look at that. Okay, fair value gap. Got it. Okay. All right. So you're a little more new than I envisioned. Okay, no problem. Let me delete this tool. All right. So if we're looking here at the candles, right? The fair value gaps here are highlighted in green, so it's easy to see them. So if you look at this candle, it does not have a wick above, right? This candle traded up, this candle traded down, but it only traded to here. That's where the wick stopped. In order for there not to be a fair value gap, this candle's wick needs to overlap with this candle's wick. So every other candle's wick needs to overlap. Like for instance, down here, you see this candle's wick stops right here. 2 candles forward, this candle's wick stops right there, which overlaps with right here. So there is no fair value gap here, right? This candle wick stops here. Go 2 candles over, the wick stops down here, which overlaps with this one. So there is no fair value gap here. It's only when the wicks of every other candle doesn't overlap. And the reason why that's important is because price likes to fill in gaps. So you would expect at some point for all of these gaps to be filled in. Price likes to be balanced, and the only way to balance price is for there to be selling and then buying in the same area. It is crazy. It's crazy if you're in it. If you're not in it, hey, do so at your own risk. But there will always be another trade. There will always be another day. And Ray, when you say that, when I mark these things up, I was like, for sure, it's not going to get up there. I'll mark these up, but it's going to happen next week or something, because it just wasn't the type of news you would expect. Like, this is a NFP type move, or FOMC type move, or something like that. I wouldn't expect this to happen on today. Swanil, yes, it happens on every time frame. So as I switch from time frames, you'll see we get fair value gaps. It's every single time frame. Yep. So it's everywhere. Yep. So, Swanil, before you develop more bad habits, it seems like you are pretty new. I would stop trading. Just take a step back and don't worry about whether you're getting into the right entry and whether you're winning a trade, because you're looking for the end result without doing the work beforehand. So it's going to be hard to win if you don't know how to play. So I would take a step back, and I would get more technicals. Figure out what type of trading you like to do. what type of setups you like, and then practice those. Then get back into looking to see if you can find a setup in live trading. Um, I think that will help you out far better or far more than if you develop bad habits that then you need to correct while you're learning. So take this moment out and just learn, absorb as much as you can, watch the market, go in and try to back test and see how different things work. But don't actively try to take a trade. I don't think it's going to help you. Ray had more than a profitable week. Ray made some people's salaries this week. William, we're all hopeful that your observation is correct. Exactly. Yeah, Ray, show us how you crush the market like that. All right, Young, good job. Way to go. Looks so you've cashed out. You're done for the week. Now you're just relaxing and getting ready for your weekend. So that's a good week for you. Congrats, and yeah, we'll catch you next week if you're leaving. If you're gonna hang out with us, then yep, see if we can't help some other traders catch a setup soon. It's just right now it's not really showing us anything. So if you were in a trade already over lunch, you're good to go. Outside of that, it really didn't present a lot of opportunities. All right, Young, good. Glad to have you. Glad you want to stay. All right. Jeez. All right, Vivian. Look at that. I didn't explain it for today, no, because with the silver bullet, you generally need a target, and we don't have a target above us. There's nothing. I mean, we have old targets from 2 years ago, and I guess as we get closer here, maybe that can be a target. But generally, the silver bullet is a target that's within some recent time frame, and we're in uncharted waters right now. 7K on 2 accounts. That's awesome. It seems like everyone's having a really good week. Earlier I was thinking that I was a really good trader, and now it seems like It's just the market. Everyone's doing good because I'm up 4 grand for the week. So I'm not itching or antsy to jump in the market today because I want to finish a good week strong. Um, I would take an entry if one presents itself that I like, but I'm not gonna just jump in because I haven't traded today. But yes, seems like everyone's doing well this week, which is good to hear, good to see. Yeah, 4 grand up. You're right, DB. As a team, we win. It seems like we have quite a few winners in the group this week. So I'm really happy that trading has worked out that well, and we missed Monday. So let's not forget we had a short week, and we still managed to do quite well as a group this week. Absolutely. 4K is more than enough and some, and it's more than I had been getting in previous weeks. So it's something that I still want to be grounded by. I want to go back and review and see how I actually accomplished that and see if I can't keep that going every week. Trade. I'm not sure about the Trade 365 platform. I don't know much about. I've never heard of it actually. So I'm not sure. Maybe someone else in the room is familiar with it and they can answer that. The trading platform that I'm using is TradingView. I'm sorry, TradingView is the platform you see here. My broker is Topstep, so it's Topstep through the TradingView platform. Oh, look at that, Atlanta 1400 this week. Awesome, awesome. If your profits this week are greater than any profits in the previous 3 or 4 weeks, go ahead and let us know in the chat that this week has been your best week in the last month. I just want to see how many people have used this channel to improve their trading. Like, I'll be the first to raise my hand and say this channel has improved my trading. Yes, Swanil use this one. It's called FVG Nephew Sam. FVG Nephew Sam. That's the one. And it'll draw the fair value gaps for you so you don't have to do it. It's okay, Michael. Michael, I know you've been busy and been missing the streams, but um, I think that by having everyone come in and announce that they had a good week, I think that also should inspire those who maybe didn't to just get back to the drawing board, do a little bit more back testing to get comfortable with the setups you like, or ask the questions to things that you are unsure about, and then see it as possible so you can get right in line and be next. Sweet. IMAX. I'm glad you brought that up. Part of the reason why I'm doing better is because I trade less. Williams 7,700 for the week. Wow. Okay, Euro GU. Okay. EU or GU. Yeah, a lot of people are trading EU and GU, especially if they get started doing Forex. No, Lorenzo, I do not have a training of any kind. I learned as a ICT student, so the Inner Circle Trader. He was my mentor, and I followed all his training teachings until I felt like I had enough between back testing, forward testing, and watching all his tutorials. I felt like I was good enough to get out and start trading, and so I did. Obviously, I didn't do as well as I wanted to, but I'm definitely moving in that direction now. So I'm learning a lot from the people in this room. I'm also learning a lot about myself and patience by hosting. So there are a lot of things going well by doing this channel. But I'm really inspired by how many wins I see the other members getting on a daily basis. And trust me, I'm far from the top person in this room as far as trading. Um, but it's working. It's working for a lot of people. Yep. Crypto Queen is right about the slippage and the manipulation by the different brokers. That's why every time you pull up a broker and you look at the same market, you see different price levels. And it's because the broker has certain leeway in order to um, change the what is it the spread. They have the ability to increase the spread to a certain degree um, at their choosing. And so oftentimes during high volatility or during high volume, they'll increase the spread, which then makes it much easier for your stop loss to be taken, even if price doesn't get to your stop loss. So um, that's why I like futures. It's all one market controlled by one group. Everyone's trading the exact same levels, exact same numbers at the exact same time. So I like it that way. Yeah, TGIF would be awesome from this area. I wonder if we're gonna pierce this 456 before that happens, but we'll see. So if you're in the room and you're on the fence about whether you should subscribe or not, I hope some of those testimonies from the subscribers in the room. And remember, I've only been live streaming. This is week 7, so we're still fairly new into this. I do have some subscribers who have been here for, if this is week 7, they've been here for 5 weeks now. They discovered me early, but others have discovered me just in the last week or two. So yeah, if you're on the fence, go ahead and subscribe. I'm sure you'll find value here and you'll improve your trading. No problem, IMAX. Yeah. All right, let's take this and shift it. We've had more progress, and now the TGIF 20%. It's at 282 now. William, I will not forget about you guys. And that's assuming I become a YouTube star. I highly doubt that, but no, you guys are my group. Yep, DB, you're right with futures. Futures, if I'm not mistaken, I think it's like $2.20 per trade, and that's per side of the trade. So it's $2.20 to enter a trade, and then another $2.20 or something like that to exit the trade. So just less than $5 per mini. So DB, so for me, that's why a lot of times, especially if you see me do a small scalp, like a 5-point trade, you'll see me go 5.25. So I do one tick. One tick will cover the commission. Because on Nasdaq, each tick is worth $5, and that'll completely cover your commission. All right, IMAX is in a short. I'm looking at the 5-minute. It hasn't shown me that yet. Let's go to another frame and see. Okay, all right. Yeah, let's see. Yep, we are now pushing down. I don't like market structure shifts outside of the macro, though. Just not a big fan of it. But on this lower time frame, this fair value gap does look pretty ripe. Yep. So the thing is, we do have a shift here. We do. The only thing is, you want to be careful. You want to make sure that the price continues. You don't want it to now come, because it can come right back and sweep this high, turning back bullish again. And so let me see what the risk on this trade is going to be. So it's almost 18 points. It's a $350 risk on one contract. Yeah, so a 1 to 2 is like really shallow. It's not even where we are hoping. We're hoping TGIF comes. We're going to be down here somewhere. Even if it doesn't get all the way to the 20% retracement and it does a 15 or 17% retracement, you're still talking about a 100-point move. So risking 16 points for a 100, probably not a terrible thing to do. Let's see if there's a fair value gap on any other time frame, and so far there is not. So it's only on the 1 minute, and we had it on the 30-second, which did get an entry. Okay. Okay, we also had another low put in. Oh, 17,430. Okay. Yeah, it's really conservative, but probably not a bad entry. Yeah, so wicks would be a structure break. But yeah, the actual shift happens when you get continuation of price. I'm sorry. Sometimes I say market structure shift and I really mean break of structure. So I apologize for that. Um, yeah, if you're assuming that the fair value gap is going to be filled in and price is moving in the opposite direction and you're in a open position, yes, you're definitely in trouble. Yep. So crypto queen, this is probably what the one that you wanted to see. So you say here on the 32nd, you see you got the breaker structure and you got the closure. Then you got the trade back into an FVG, into a fair value gap. So on the 1 minute, it looks like just a breaker structure, but on the 32nd, it looks like a market structure shift. Yep, and that's exactly why you shouldn't get cold feet when you press the button to buy or to sell, and that's why you have to practice. You have to practice enough to where you feel comfortable taking that trade, and you feel like all the different factors that go into confirming your trade have been considered. Okay, so he's saying he saw a sweep of the high. He saw it then energetically move the opposite direction, taking out the low, closing below, retracing back to a fair value gap. So he took the entry. 261. Okay. All right. I'm going to go back to the 1 minute because I know not everyone has access to 30 seconds. So I want to make sure that we all can see things that we're familiar and comfortable with. And let's just see if we get continuation down or if we get it building back into this fair value gap here. Yeah, essentially. Yep. Let's see if this is anything. All right, Michael, have a good one. We'll catch you next week. Hope you have a good weekend. Yep. See if it takes out 50% here. Almost a 50%, 423 and a quarter. We made it all the way to 422 and 3/4. So another half a point, and it'll be at 50% of that fair value gap. Okay. It clearly took over that 50%. All right. Looks like it probably will trade all the way through here, but let's wait and see. Big push down. We're going to see where this candle closes. All right. Catch the next one. Let's see where that candle goes. I'm watching on whatever time frame that I'm currently watching. So right now we're on the 1 minute. So everything that you see, that's the fair value gaps, they're all from the 1 minute. Um, in this case, I highlighted these two candles as a bearish breaker. Whoops. Just the candle bodies of those candles is what I highlighted. Oh, okay. Yeah, no problem. Yeah, I felt like that would be easy reference material. So you can go ahead and just quickly click the subject you're looking for and it'll take you right there. All right, so I'm going to wait for the next 5 minutes or so. I want to see what price does when it gets into the macro period. All right, I'm impressed. We have 90 people in our room right now on a Friday afternoon at 2:45. Normally, Friday afternoons, you see people closing their laptops, whether they were had a good week or a bad week, but either way, they're looking forward to their weekend, and trading is the furthest thing from their mind. I don't know about you guys, but on the weekend, all I want to do is to see the charts. So, so I'll stay here until the end of Friday, happily every week. Okay, let me check the dollar. I haven't looked at the dollar in at least an hour. Okay, so we got equal lows on the dollar. That would be, it would love to go ahead and sweep those. Yeah. Price completely just pushed out of my charts are all messed up that I haven't looked at in an hour. All the candles are out of the screen. Yep, it did hit consolidation. You're right about that. No problem, Pip Syndicate. No problem at all. All right, Vivian, see you on Monday. Glad you had a good week. I hope you have a good weekend, and we'll catch you next week. You see? Oh, okay. I see. Mm. Okay, now it is 250. So I feel a little better about where price is. Now I want to see what happens during this time frame. All right, so now that we're in this time frame here in the macro, let's just make sure we understand where our swing high and lows are. So I went ahead and marked those so we can see where we are in price structure. 50% of this leg is roughly where we are right now. Yep. Yeah, you're right. It was a nice short. I would say what I would favor now would be this. That's what I would favor right now. Yes, the fair value gap indicator. Here you go. When you click indicator at the top, right here, FVG nephew Sam, right here at the top. Crypto Queen. Only recently have I looked at lunch highs and lows. I never really did before, but then some members in here and some of the subscribers start talking about it, and so I'm happy to incorporate anything that'll enhance my trading. And so I'm still learning to remember to look at lunchtime highs and lows. Okay, in 5 minutes, we'll have power hour for the final time this week. Hope everyone is ready and preserved their capital. Looking for a big move this last hour of the day. All right, what is price waiting for? They say 450 or 380. Yeah. Yeah, if I had to guess, I would say 450. Yep, 90 more seconds and we're ready to go. Okay. Yep. I would say power hour has been better for me towards the end. So more of like 340, 350 in that area. But yeah, power hour can be good as long as you know what you're doing and you know when to get in and get out. All right, we're 90 seconds into power hour. So far, nothing. Still waiting. Mhm. All right, I do want to let everyone know. I'm sure you are all already aware based on the price movement we had this afternoon, but we are over 300 points in range for today from open to the high, um, just to set expectations for what may happen in the next hour. Probably also why we're seeing this type of price action. It should have pulled back a long time ago and it didn't do anything. So to have it stall now for the last 30, maybe 45 minutes or so, completely normal. And I'm sure the bulls are a little exhausted right now. Okay, almost 2%, Antonio. That's really good. A solid day. That's a solid week. And you saying you're there for the day. That's awesome. All right, can we get this break here? There we go. We got it. Sweet. All right, running out of time though for it to do something major in this time period, but let's see what happens. Okay, now we just shift our high up, and then how high it wants to run. Ron, so the TGIF is on the weekly candle. So what you want to do is you want to grab the weekly candle and you measure it from the lower wick all the way to the upper wick. So take the entire range, and then you want to see it move off of the. In this case, since we're bullish, we want to see it move off of those highs by 20%. Oh yeah, the dollar is still pushing lower. Got some on the hourly, got equal lows down at 103.245. Think that could be where it goes next. All right, 105. Let's see if this next candle is also a bearish candle. Then we get a push up and then a quick push down. All right, final 3 minutes of the macro. Let's see what happens next. All right, keep going. Couple more ticks. All right, now let's see if we get a big push down to about 427. Come on, keep going. TP5. Oh man, Crypto Queen, you are banned from the channel now. You're making all the rest of us look bad. Between you and Ray. All right, last chance. Let's see if this can get down to 426 and a half. Let's move this out of the way. You didn't make it. This one. Didn't quite make it during the macro period. I wanted it to get down there during the last minute. 457. Is it still going to 457? That's the question. Yeah, I do too, Crypto Queen. I'm sitting here and I'm not really feeling great about it. I really would have liked if this candle at 312 would have been over here at 309. That would have set everything up for me. Then I would have been feeling good about it. But right now I'm not feeling great about it. Hey, almost 315. We got another minute before we get there. I think I like it now. You want to see it push lower than this, though. This is not comforting that it didn't push lower. Hmm. Okay. Don't like that. Let's find the closure of this candle and see where we are. We close above, I'm going to cancel the trade. I want to see it retrace back into the fair value gap. Hmm. Yeah, not looking good, but it's okay. Small risk, hoping for a big reward. Those don't usually work out that often. But yeah, it just didn't give me the confirmations I needed for a strong entry. So, oh well. Yeah, you're right. We may not get one. We may not get a TGIF. I was crossing my fingers there, hoping that we would get it break down in price, but yeah, it's not looking great right now. This is probably one of those moments where it holds off till after 3:30. So we'll probably have another 12, 13 minutes of consolidation here, and then we'll see what happens. Yep, end of the week, end of the day, and price just ran for 300 points today. So it just I really may not have any other instructions for the rest of the day other than just a little consolidation until the closing bell, and then it opens up next week, and we'll see what happens with price. Sweet. Okay, a little breakthrough there. Man, this is why you don't move your stop loss. Yeah, I would have hoped that the dollar would have reached those equal lows. It got close to it, but then it stalled in price. Had the dollar reached those equal lows, I'd have felt a lot better about this push lower. . 1429 inverted fair value gap. Okay. Let me draw that one out then. Since it's inversion, that means it's already gone. Alrighty. Should have held my short, but I didn't. I'll put it back up there for anyone who's still in it who didn't get out like I did. Your 2-to-1 is worth 23 points. There's that inversion fair value gap. Yep, it's already in the lower half. I mean, it's not over yet, but it's definitely in the lower half. Yeah, Ash is really good. I watched. I have a unicorn PDF, and I watched his videos. Yeah, Ash is he's a top notch educator. Yeah, so crypto coin. The way this comes out is that the way that I do this, or I like to try to call it, is so I'm looking for a market structure shift in this time period, right? And so I also wanted it to be bearish, but the problem was we were already bearish. So I had to come up with a scenario that would switch us bullish, have us sweep that high to create an even closer low, because this low right here would be too far for price to get to within the macro to sweep it. So I needed it to make two highs, so this high, so the low could shift up, and then it could be broken before time expires, because they only have 20 minutes to execute this entire market structure here. So that's why I drew this. And then as you come over here, as I look at it, so this high right here is this high. Then this low is this low. So so the same candle really is this swing low. Then the next high is this high, the candle at 308. And that's why by 310, I was like, I needed to run down to 426 because I needed it to break this low here. And it waited for 2 more minutes and broke it outside of the time zone. So I was kind of up in the air. I was like, do I believe it? It did it 2 minutes too late. I needed it before 310, and it happened right after. So but that's how I called that, is because I knew the only way that I could get a low to be broken to turn us back bearish is I needed the swing low that needed to be broken to shift up closer to where current price is. So an only way to do that would be to make two highs. Okay. Yep. Definitely. Yeah. Check those macro videos out. It helped me find time, because they always talk about time and price. I'm really comfortable with price. It's just that time slips me a little bit, and the macros just put me into certain times that I'm looking for things to happen, and outside of that, I'm sitting on my hands and protecting capital. Yep, I didn't trust the setup, which is why you saw me reduce my stop loss, which is also why I got stopped out of the trade. Because if I didn't reduce stop loss, I'd still be in. That doesn't mean that I would have a winning trade, but I would still be in, and I would have the opportunity to win this trade. Yep. Okay. Yep. No worries. And then next week, if it still doesn't resonate with you, let me know. I'll go over it again. Yep. And then keep in mind also that that sort of market structure that I wanted to see was me anticipating a TGIF. So I was already bearish, but it right now looks like we may not get that today because it would need to do quite a run in 30 minutes. Right, where is TGIF? Oh, wow. Way down here. So, yeah, I'm not sure we're going to get there. You talk about 150 points. Probably not happening. Antonio, check out the videos from Hydra. Go on YouTube and look up Hydra, and then he has a couple videos on macros. I'm sure Ash Trade probably does as well. So also check out his channel. All right, client price has climbed back above this fair value or this inverted fair value gap, which looks to now be in play again. Okay. Oh, okay. Didn't realize there were two separate hydras. 420, 20-point scalp anyway. TP set at 420. Okay. All right, let me go and take another look over and see where the dollar is moving. All right, it still didn't sweep those equal lows that I wanted it to sweep in order for the dollar to start pushing higher, which will give us that push lower. Because of it, I'm not overly optimistic that we will get the push lower. Right, we're starting to also see a crack in correlation now between the three indices. The Dow is currently doing the opposite of what S&P and Nasdaq are doing. Hmm. Now I'm looking at the three indices, and of the three indices, Nasdaq was the only one to make a new high this hour. All the others, the highs were made last hour. But they also had a sizable retracement before the hour concluded, whereas Nasdaq closed last hour close to the high, so it was pretty easy to break that high. Great. Let's see if price pushes through without too much fuss. TGIF is just a common term, a phrase of "Thank God it's Friday" or "Thank goodness it's Friday." So it's a strategy to use on Friday afternoon. Okay, so 15 minute. Let's see. All right, about 20 minutes left in our session today. Let's see if we can get a nice entry at the end or something major to happen in the last 20 minutes. I'm still hopelessly optimistic that something good will come. Oh, I'm sorry. And this red box is just a fair value gap from over here. So it was a bearish fair value gap that was traded through. Um, and we wanted to see if it would become an inverted fair value gap. So go from bearish and then turn into a bullish one on the return back down. It looked good at first, but now we're seeing that we're trading back into it. So we'll see if it holds. But that's what the red box is for. It was originally a bearish fair value gap that flipped to bullish. This right here was a short tool I was using to take a short. You can see it still hasn't stopped out yet for anyone who's in, but it hasn't made a lot of progress towards delivering its take profit either. Yep. I know there hasn't been a lot of fireworks today during the session. There wasn't many entries to take. Price was just running up from lunch. So if you weren't in at 1 o'clock or before, it was tough to get in this afternoon. So I realized that. But I do want to thank you guys. Thank you all for sticking with me this afternoon and watching price action as it was, even though it didn't produce a lot of entries for us. And if you got some value out of today's session, please hit the like button. Go ahead and do that before you forget, just so, at the end, I know YouTube uses it, but I do as well. Sometimes I look at it and I say, okay, this video gave me 90 likes. This video gave me 45. Not really sure if I just didn't ask enough or if people didn't like the content. So I also look at the likes to see look at people's engagement and see what type of value you're getting from it. Um, so if you did enjoy the session, please go ahead and hit the like, please. It's almost like the market makers are telling us to all be content with enough. Stop looking for more. Luis, that's excellent, man. Good job. Yep, absolutely. Oh, I've seen sell off happen at 4 o'clock. So as soon as it taps 4 o'clock and everyone's turning their computer off, then all of a sudden the market runs 100 points. I've seen those, and it's almost unfair that that happens because, of course, most people are in some kind of account that has restrictions on the times that you can trade. And so when the market does the big move at the very end like that, it's really a slap in the face to the retail traders like us. But you know, we're at their mercy. There's nothing we can do about it. All right, Martin. Have a good weekend. I'll see you next week. I've actually watched a few videos on how the easiest way to pass a challenge, and one of the strategies is to over leverage. They said go ahead and if you're going to fail a challenge, fail fast, but try to see if you can't pass your challenge. And then once you pass, get back to your normal leverage so you don't lose your account. But trying to hurry up and pass your funding is one of the best strategies. Yep. Volume and balance on the daily. Okay. I don't think I see a volume and balance. Let's see. Nope, I don't see it. Hmm. All right, for everyone who's believing in the 350 macro, we're about a minute away from that. Going back to micros. All right, Luis. Well, you passed your second challenge and you have one that you're waiting for a payout. So now you have two. Oh, okay. Yes, I do see a volume imbalance there, the 18th and 19th, but I do see that price traded back into that same area on December 27th and 28th. Okay. Okay, it's 350 now. Let's see what this last 10-minute macro brings us. Okay, just put in equal highs right here as well. Equal lows here. That's toying with us, playing with our emotions right now. Yeah, nothing's happening. Nothing's happening there. Sorry, now you're doing a good job of feeling the airwaves, I guess. But yeah, nothing's. It's just kind of playing in the zone here. Oh, what was that? All right, now we're awake again. Let's see what happens next. Let's get rid of some of this artwork we have on the screen. All right, let's see if this one's next, and then if we go for 457. Bingo, there it is. That negates that short that I went in on. Glad I got taken out with only a 6-point loss. All right, dollar is now pushing towards those equal lows that I was waiting for it to take 40 minutes ago. $58, yeah. Oh, yes. Let me find that for you. Daily. Whoops. Oh, okay. Yep, I marked it up at 457. So it's an hourly high on January the 4th, 2022. Glad I put a marker on there because, yeah, I definitely wouldn't have remembered that. All right, so we are 2 minutes away from 4 o'clock, and you can see how close we are still to the high of the week, the high of the day. So far, yeah, it just hasn't been a lot of pullback. We definitely didn't get the TGI Friday we expected earlier, and not really sure if price is going to push through 448 or if that's going to be the high of the week, and it's now going to pull off of that, and then we're going to just shut it down for the last hour where it just consolidates. We shall see in the next minute or two. Sit here and see where things close off. If you are still here and you have any additional questions or comments or anything, make sure you throw it in the chat before we shut down for the day and then for the week. Link to the Discord. Go into the description of this video. Triple H. How many trades did I take this week? I don't know, probably 7 or 8, maybe. Then I had a couple days where I did two trades, and a couple days I did one trade. So maybe 6 or 7 trades for this week. Yep, 17.44. Yeah, you did say this. The standard deviation is the 4 standard deviations. So it just returned back up to that same level and then crashed back down once again. Yep. All right, Fauci. See you next week. Thanks for another good week and for joining the chat and helping us out. Thank you. All right, we're at 4 o'clock now. All right, Crypto Queen, take care, everyone. Have a good weekend. Again, thank you for all of your help and for being supportive of me and the channel, and also for helping out the other traders in their trading journey. I think we all have quite a ways to go, so we should be excited about the future, regardless of where we are today. And again, thank you all. I'm going to shut down and start my weekend. I hope you do the same. Enjoy your weekend. Monday morning, 9:15. Talk to you then. All right, everyone. Take care.